Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 29th of June 2021. And we're carrying out our regular morning update on the news, financials and gold and silver prices, which we can see both gold and silver continuing to soften. Not a lot, but just a little. But they may have even further to fall. So let's take a look. Well, good morning, everyone. It's Tuesday, the 29th of June, and it's an overcast morning with us here at 0941 GMT +1. In fact, so overcast there is no visible sign of the sun this morning. But nevertheless, hopefully we can shine some light on what is happening in the gold and silver markets today. Well, first of all, let's have a quick look at Bloomberg and see what the main headlines are. Spain takes UK visitors off the list for restriction-free travel. Obviously, because of the new variant of COVID-19 hitting us here in the United Kingdom, has now embargoed us from a lot of travel overseas. And the suspicion is, of course, this will spread elsewhere. Emerging market growth diverges on virus capital flight. Basically what that is saying, taken together, major emerging market economies have already surpassed their pre-virus peak. Individually, they're recovering at different speeds, depending on virus containment, trade, commodities, capital flight, and a low base of comparison with a pandemic recession. Bloomberg Economics expects gross domestic product in major emerging markets to expand 8% in aggregate this year, after contracting 1.1% in 2020. For those interested in emerging markets, excluding the impact of base effects, commodity exporters such as Chile and Saudi Arabia are set to outperform their peers. We also have India budget deficits seen widening on virus relief measures. Of course, that should be no surprise. However, UK house price surge most in 17 years, nationwide says. And we know that's true because I've had an opportunity to sell 2 properties these last 6 months. And they both sold literally within a week of them going on the market at or very close to the asking price. And we didn't offer them that cheaply, to be fair. So there is a sort of pent-up demand for new houses or existing homes. But what's happening is the available stock is not that great. We don't see this house price surge continuing indefinitely for the simple reason, quite frankly, because the current circumstances will assuage and more properties will eventually come onto the market. But obviously, while we've been in lockdown, in the main, people have not been that keen to sell their properties. We at Illuminati Silver believe that property is one of the best investments long term, along with gold and silver, but nevertheless also appreciate that they are extremely high at the moment, certainly in certain parts here in the United Kingdom and in the United States. Can they continue? Theoretically, yes, but once interest rates start to rise, we think that will certainly dampen down any accelerated growth that it has encountered recently. Commodity traders harvest billions while prices rise for everyone else, but this is the bit we want to look at. Not a headline we like, but we have to address it. Gold heads for worst month since 2016 on Fed's hawkish shift. And this is updated today, just a couple of hours ago, or a few hours ago. Gold headed for the biggest monthly drop in more than 4 years after the Federal Reserve sped up their expected pace of policy tightening, sending prices tumbling below $1,800 an ounce. The rise in US stocks to a fresh record and a resurgent dollar have also weighed on the precious metal, and this is something we mentioned yesterday, in fact. Investors are also assessing new travel restrictions in Europe amid concerns about the coronavirus Delta variant, which helps spur a rethink of the reflation trade. Bullion is stabilising as traders now focus on the timing of when policymakers may start dialing back stimulus, while also evaluating risk sentiment. Fed officials meeting in June responded to increasing inflation risks by pulling forward their expected timing and pace of interest rate increases. So, we can see, let's look at what John Feeney says here. Gold is starting to find support here at the 1775 level. Something we've noticed on YouTube, and we might cover this in a separate video. Some gold advocates have started to sell their gold. Some of the pumpers have restricted the number of videos they've recently put out. We're going to cover the pumper one in a separate video. It's quite interesting. Why have they done that? Because they believe that gold is heading lower. And with a rising interest rate environment, that is quite possible. Having said that, of course, a lot depends on the level of inflation that's occurring versus the level of interest rates that are introduced. Because at the end of the day, it's the net figure that determines whether gold goes up or gold goes down. And we're not totally convinced that the Fed can introduce sufficiently high levels of rate in order to ensure that inflation is permanently curbed. In which case, that will be a good environment for gold. But we shall have to wait and see. Going on to the BBC, school COVID isolation rules could end in the autumn, which is good news. Mobile phone ban planned to improve school behaviour. They've at last realised that children looking at phones in school are distracting them from listening to the lessons. What we found quite interesting, and we have to say we're not parents of young kids, but while we were all in lockdown and children had to have home learning, often delivered by schools online, so they're looking at Zoom or Microsoft Teams meetings, generalizing slightly, but the overall take-up of this and effectiveness was quite poor. Apparently, parents found it difficult for the children to focus on these forms of tuition, which is bewildering because when they're actually in school, they spend all their time on these mobile devices looking at videos. Perhaps the education system really needs to make their videos more interesting. Let's see if they can achieve that. Hong Kong bans flights from UK over COVID concerns. A Picasso painting stolen found in Athens. And I think as far as the British news is concerned, that's it. US and Canada, really, the only sort of interesting thing for us, really, is US judge throws out Facebook antitrust lawsuits. The judge said lawsuits filed by the FTC and a group of states were vague or occurred too long ago. So Facebook wins again. This will get some people going. UN Human Rights Chief calls for racism reparations. A report urges countries worldwide to make amends for racism against Africans and those of African descent. It's an interesting topic because how do you make reparations for something your ancestors have done? And is that not too late? Perhaps the answer is, let's get rid of racism now and make sure it doesn't reoccur. I think that would be far more effective, but it's highly political view. So we're a channel about gold and silver, so we're not going to focus on that too much. Okay, so what's happening with the dollar? Well, it's up. It's breached that 92 level again. Let me click that off. It's breached the 92 level, and we can see the effect that will have on gold and silver in a second. Energy, virtually no difference. WTI crude and Brent crude down 20 cents and 10 cents respectively, but still well within that $70 category. Stocks yesterday, well, the Dow took a slight reduction of just under 0.5%, but the S&P and Nasdaq were both up just about a quarter and 1% respectively. Today, though, as it's the time now is 9:51 GMT plus 1, and the Euro Stoxx index is up a third, or let me rephrase that, not up a third, up a third of a percent. FTSE index up a quarter of a percent, and the DAX up 0.6. Asian Pacific overnight generally down more or less around close to 1%. So looking at what's being announced this week, and we've covered this in our weekly update on Saturday. Yesterday, New York Fed President John Williams spoke at the BIS panel, Richmond Fed President Tom Barkin spoke, and the Fed Vice Chair for Supervision Randall Quarles spoke on cryptocurrencies. Now, I haven't got a summary of those speeches today, you'll be pleased to hear, because we want to keep this video short, but what we can say is that some figures from the Dallas Fed survey announced yesterday missed expectations, but some parts of it showed sizable gains. For example, its production index increased to 29.4 in June from 15.7 in May. So the overall tenure of data so far is relatively positive in terms of the growing economy. Now today we have the US Home Price Index year over year up to April. Richmond Fed President Tom Barkin being interviewed, but this is the key one for us this morning, or this afternoon in the UK, but this morning Eastern Time, the Consumer Confidence Index. But as I've mentioned and will continue to mention, the three key things this week: ADP employment report, plus continuing and initial jobless claims. These two will be also quite crucial. The market and ISM manufacturing index, but the most important of all, the non-farm payrolls. And we may do a separate video on that because that could seriously affect the price of gold and silver. The results of the non-farm payrolls, if much stronger than expectations, will have an adverse effect on gold and silver prices. If below expectations, and goodness forbid, if actually lower than the last month's figure, then that would be indeed very positive for gold and silver prices. And we will express what we believe it's going to be in the video that we'll produce later in the week. Highlight of the day. What's happening to gold and silver? Well, over a 24-hour time period, we can see that gold is down $6. And in fact has fallen from, where are we? 1778 as low as 1768 and back up again in just 4 hours. If we compare the current price, which is it's just gone up to 1770 as I refresh, ended last week at 1782. So it's down $12 since Monday. Silver, let me refresh the page to make sure it's not stagnant. Silver today is down 11 cents at 25.96, so it's fallen below that crucial $26 level. It did that earlier, went back up and then come back down again, and it's seesawing. We can see that compared with Friday's close of 26.14, we're down 18 cents. So not great news for gold and silver at the moment. And bear in mind our concerns about the end of the week. And it could very well be the case that analysts start to predict a fall on Friday, and therefore it brings the market down before Friday even occurs. Looking at Bitcoin, that's up again. $1,603 in the last 24 hours. It's been as high as 35, and it seems to be heading up. We have the view that that won't continue for much longer, and we will see another dip downwards. But let's see if we are right. That's it for now. Let's just have a look, if we can, at some videos we produced yesterday, which we would wholeheartedly recommend to you. India buying crypto rather than gold, why? And this highlights why the younger people in India are actually purchasing crypto and forsaking gold. That's not good long term for gold, if you bear in mind, of course, India's penchant for the precious metal and for silver when they cannot get their hands on gold. Also our gold and silver morning update, but we want to alert you to our equities on the verge of collapse. In other words, have they reached their high now, and can we expect them to fall quite dramatically? We're not necessarily of the opinion they're going to fall 70 or 80%, but they certainly are due a correction at some stage into the not too distant future, but perhaps only when the amount of stimulus has filtered through the economy and has been spent. No more financial support. This is based on central banks thinking now about tapering their bond buying program. That's it for now. Have a great Tuesday afternoon or Tuesday. If we produce another video today, we shall of course alert you to it, but so that you're notified, please subscribe and press the bell sign. Hopefully you'll give us a like up. Is that the right word? Thumbs up. And comment. Thank you once again. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.